Rod, you've been in GameStop waiting for this moment since 2017. Everyone knows why people are so negative on it. Physical retail is going to be the blockbuster of video games. Why did you believe so much that you held through all that down, when it was dead money?
Well, Joe, it sure felt like I was wrong for a long time. I'm sure a lot of people bailed along the way. I would say people need to think about GameStop. A lot has changed since 2017. So the thesis that I had in 2017 has evolved over that time, and I think that's probably the most important takeaway for any investor in any security in any market. They need to keep their thesis fresh, and they need to revise it as new information comes in. And a lot of new things came in with GameStop over the years. They had a strategic review in mid-2018. They had a new board refresh and CEO appointed in early 2019. They endeavored on a new strategic plan in 2019, a GameStop reboot strategy to really rationalize their core business and double down on the core video gaming market. So there were some mistakes by legacy leadership. I don't want to talk about that too much, but the ship was righted, and they got the right folks in place, and then a lot of new and interesting things happened over the course of 2020 along the way to bring us to this craziness that we're in today.
This craziness that we're in, I mean, now the thesis, does it make sense when it's worth $22 billion? Are you still long GameStop, or do you wish it to get this far, this fast?
So I think Joe and Tracy and I talked about this yesterday in the morning on Odd Lots, that I don't think that you can rationally look forward at what we expect discounted cash flows would be from GameStop to justify a price at this level. But that said, all market participants knew about the short interest. This was not something unknown. It had been around 100% for more than a year in terms of shares outstanding. So that kind of rocket fuel that was embedded underlying the equity, underlying the transformation, underlying the entrance of an activist investor, RC Ventures, Ryan Cohen, the founder of Chewy. It was just of an activist investor, RC Ventures, Ryan Cohen, the founder of Chewy. It was just the confluence of that plus COVID. All of the right things fell into place, and regrettably for the funds on the other side of the trade, they didn't, in my opinion, have the proper risk management in place. They didn't actually have a hedge for their short.
Yeah, certainly did not, Rod. I do want to go back to that fundamental case, and obviously timing plays a big part in everything. You were early to this. Obviously, it's paid off for you. But when you looked at that company, and you looked at the consecutive quarters of declining revenue,
right,
the EPS constraints, the margin constraints here, and then put that against the landscape of, we're talking before Cohen came along and some of these other people came along. What was it about it that made you believe that there was a growth story there that no one else saw?
Yeah, I think fundamentally we need to look at what is at least their legacy business and think that it's very much at the whim of the video game console cycle. They predominantly are a seller of physical video game products. That would be the discs that you put into a PlayStation or Xbox or a Nintendo console. And therefore, it was long in the tooth, the console cycle. So in addition to those macro brick and mortar headwinds that GameStop and other retail players were facing, GameStop was at the end of a long console cycle. It wasn't news to me, and I don't think it should have been news to any long investor over the course of 2018 and 19 that we saw negative comp sales for a long time. And it was really all about, once validation of the physical media playing capabilities of the next gen consoles, the Xbox Series X and the PlayStation 5 became apparent in mid-2019. That was when I really became very aggressive in accumulating even more. And the price, obviously, it's hard to see on a chart right now unless you put the log function on. But back at that time, it did get down below $4 per share. And it just so happened that several investors, Roaring Kitty, Michael Burry, myself, independent of one another, all made the same, decision to invest heavily at that point when we realized it was just going to be a waiting game.
So just explain, though, why physical retailing of video games, why discs, which don't really exist in any other form anymore. People don't really buy, I guess probably people buy some DVDs maybe, but not really.
Redbox is still around.
Why is it still exist as a thing when so much is streaming and online?
Yeah, Joe, I know we talked about it and I went into it in detail on Odd Lots, but there's a lot of just the economics for the end consumer that people need to think about. So a video game is going to provide you with presumably many hours of entertainment value, but buying it new as a physical product at $60, and the next gen ones are going to come out MSRP at 70, so that's accretive for earnings too. But there's a residual value inherently that's there on that video game. So if I want to sell it to a friend, sell it back to GameStop, trade it, if I want to just simply have that collectability piece, if I want to be able to gift a physical good to somebody during the holidays, those are some of the things that I think draw value still for the consumer. You know, the mix of physical to digital, people have been talking about for years that digital is growing and it's going to eventually take all of the share. And, you know, I would think about it more like, yes, physical will continue to be less of the broader market, but demand is still there. And it was evidenced amid COVID when there were some supply chain issues. I think clearly we've seen hardware shortages for some time, but on the software side, consumers were trying to buy physical media during COVID, and you actually saw on reseller sites like eBay, Amazon, markups far in excess of MSRP for the physical commodity. So clearly it wasn't a function of demand not being there, it was a function of the supply not being there. And I think that type of, you know, due diligence, that looking very closely at things to understand where is the demand there, or you know, is it going away? I don't think it's going away. And if we look at PS5, Xbox Series X, the physical disc present hardware is selling at a much better rate than the digital only. So the PS5 is the cleanest example because it's simply a console with either a Blu-ray disc drive or no disc drive for $100 difference.
Yeah.
And from all my research, it's about a 75-80% mix split for the physical player versus the digital. So clearly consumer demand is there. Obviously, I'm not privy to what Sony's build plans are into the future, but that tells me that there's a longer runway than clearly the bet was that bankruptcy would be here by this cycle, and that bet proved wrong.
You know, we've been talking in the last segment about the fundamental case, but that's probably, I would say, like 1/3 of the story. The other story is the extraordinary social media phenomenon, which of course has propelled this to new heights. Talk about how that catalyzed, because it's one thing to have a strong case, it's another thing perhaps to have a short squeeze. It's another thing to have to be a global mania of people all glomming onto this trade at once. How, in your view, did that come about?
Yeah, Joe, I don't think it could have happened without COVID, for the sake of the underlying business as well as the sake of the community feature. So many of us, and I say us loosely, individual investors, retail investors, had been in GameStop for years doing our own due diligence. I'd been on StockTwits since 2018. I eventually came to know a lot of folks who were putting out some really great research on both StockTwits, Seeking Alpha, across a variety of social media platforms. I think the most salient one, though, is who we've all come to know as Roaring Kitty, DFV, keeping it PG here on air. He was hosting a YouTube channel, and eventually, you know, there was a couple dozen of us that found this to be a really great community gathering place where we could talk about our own thoughts and theses around GameStop, what we were seeing, our own work, sharing it, and just having open discussions, getting candid feedback, being willing to hear other people's thoughts. And we would be on this thing. He'd kick it off Monday, Wednesday, Friday night from 7 o'clock at night. Some days we'd run until the morning hours to like 1 or 2 a.m. And it was just not always all GameStop, but the vast majority of it was GameStop. And it was just a loose group of investors trying to get better at understanding what we were seeing. We all were like, what are we missing? Why is this stock 4, 5, 6, 7, 8, 9?
Just, you know, retail was under pressure back then, still is.
Yeah.
What was it about it? And this is, I mean, we're talking before Cohen came along and some of these other people came along. What was it about it that made you believe that there was a growth story there that no one else saw?
Yeah, I think fundamentally we need to look at what is at least their legacy business and think that it's very much at the whim of the video game console cycle. They predominantly are a seller of physical video game products. That would be the discs that you put into a PlayStation or Xbox or a Nintendo console. And therefore, it was long in the tooth, the console cycle. So in addition to those macro brick and mortar headwinds that GameStop and other retail players were facing. GameStop was at the end of a long console cycle. It wasn't news to me, and I don't think it should have been news to any long investor over the course of 2018 and 19 that we saw negative comp sales for a long time. And it was really all about, once validation of the physical media playing capabilities of the next gen consoles, the Xbox Series X and the PlayStation 5 became apparent in mid 2019, that was when I really became very aggressive in accumulating even more. And the price, obviously, it's hard to see on a chart right now, and let's see what exists the log function on. But back at that time, it did get down below $4 per share, and it just so happened that several investors, Roaring Kitty, Michael Burry, myself, independent of one another, all made the same, I guess, decision to invest heavily at that point when we realized it was just going to be a waiting game.
So just explain.
Need to have the business abroad. So I would like to hear a plan, and I